All right. Hey there. What's going on, everybody? Chris Franks with Texas West Capital. Good to have you guys joining in a few minutes after 11 a.m. Central Standard Time here on Friday. What is this? The 2nd of February, 2024. I hope you guys are doing well. We've got Fibo coming in today. Finally, he was able to make it here. You guys know he's got a real job that he does as well. Life got kind of crazy. And that's what happens sometimes. But, guys, what we plan on always is to have him here every other week as his schedule allows. So he is finally here today. Hopefully you guys are excited about that. I'm coming at you live here from just north of Houston, Texas. And does not feel like winter here. We're going to get to the 70s coming up here. It's just kind of crazy what we do in South Texas, Southeast Texas kind of area. So we had real quick, what I'm going to do is talk about jobs here real quick. Show you a couple of quick charts, and then we'll jump in with Fibo, and he will give us all his charts and all his knowledge. And y'all, your job is to sit there and soak it up. Can you do that? All right, guys. Let's see here. So we had jobs report today. Excuse me. And jobs report came in kind of crazy. I think it was ADP again was looking for this huge miss. And we had 333,000 expected, came in at 353,000. So surprise to the upside. But with that, we also had our unemployment rate, which was 3.7% last month. It was expected to rise to 3.8% this month, but it stayed at 3.7. So surprise to the, staying there. It didn't rise like we expected, or like the economists expected anyway. Other big things to kind of look on here is that the underemployment rate rose from 7.1 to 7.2%. But of course, I'm most interested often, as the FOMC is, average hourly earnings month over month are up, it looks like 0.6%, are up to 0.6%. So it was 0.4% last time, was expected to be 0.3, dropped. Instead, it almost doubled there at 0.6%. And then the the labor force participation rate, I can't even say it, stayed equal there at 62.5%. And average weekly hours. So average hourly earnings rose, surprise to the upside. Average weekly hours dropped. So a little bit surprised to the downside there. Normally 30 or last time was 34.3 hours, was expected to be the same this time, came in at 34.1. So basically average hourly earnings up a little bit, but the hours themselves worked are down just a little bit, maybe sending it out there. The question always is, what kind of jobs, are out there? And I think we continue to see more of these service jobs and whatnot, these lower end paying jobs. So yeah, jobs are being created, but they're not the kind we really want. But nonetheless, the economy continues to pump along, right? If you saw Meta earnings yesterday after hours, double beat. Meta just skyrocketed after that. Amazon, same thing. Apple also double beat, but also dropped because people worried about China and what's going on over there with the sales. But those three together equate to about 18% of the NASDAQ 100. So it was really important to watch them come out last time. And if you're wondering why the S&P rallied this morning and other things rallied after that, not this morning, but after that, that's why. Of course, everything kind of dropped a bit this morning with the jobs report. Knee-jerk reaction stuff, guys. I don't think it changes much of anything, but I don't think we get, I think it's probably at least May until we get a first rate cut. I know the market was, they were looking probably like around March, but that seemed to have changed right before the jobs report came out. So, again, I don't think we're going to get that rate cut until at least May. And there's another thing, guys, everybody talks about how, the rate cuts lead to the, when you have the rate cut, it says, okay, there's a recession here and whatnot. I did share a post from Alex Kruger, macroeconomist, friend of mine, and somebody that you guys should be following out there. He's a lot of real, if you're watching the numbers, if you're watching fundamentals and stuff like that, he's one of the better ones to watch, guys. A lot more grounded, but he brings up a lot of information about the nuances involved with that. It isn't simply, oh, if the rate cuts happen, then this happens, right? It's what's the background. Are we in a recession? Are we not in a recession? You know, these kind of things are in it. And so he's thinking soft landing is happening, is going to happen, and we won't see the stock market die off with the rate cuts. So I think there's a lot in that that's probably a lot more correct than not. It kind of goes along with what I'm thinking in terms of the charts rallying and continuing to rally overall, which is bad news for bears, right? Because bears have been looking for everything to crash for a couple of years now, and we're still not, right? Mark says, at work, I have been saying these rate cuts are not coming fast in 2024. Been yelling it into the air for a while, and everyone thinks I'm wrong. Well, here we go, baby. It's good time, right? So real quick here, let me show you a couple of charts, guys, then we'll jump in with Fibo, all right? Good to see y'all checking in. I see Mark's here. Sean Skizzle, what's up? Spiral Architect, Andrew Bennett, Frank, more, what's up, man? Sats McGee checking in. Who else we got here? Diego, what's up, buddy? Data checking in, Evolution. Chef Webb, look at that, coming in, finally on time. Good to see you. All right, guys, so let's jump in here real quick. Just real quick here, here is my, you know, you've seen this time and time again. This is the chart I've had for what, since all the way over here in June of 2022. And we started putting this together and talked about this was going to be accumulation. As we got over here, we talked about the likely drop into a spring or a terminal shakeout, which we got. Range, if you guys remember at this time, I practically drew this almost exactly coming up here. Talked about the key level being this 25,000 level here. We got that. Everything's doing. So, I mean, there's nothing changed here, guys. Everything continuing to go as expected. You can see that we got this dip back here. Remember, we bounced right here off last month's daily S1 pivot. And so that's also, you know, everything closed here above the EQ of this channel. And so now we're rallying up to the current daily pivot. I don't see any reason to change anything at this time. This looks like 1, 2, 3, 4, 5. And then we got a short pullback here. So now we're looking for a pullback higher. It looks like a WXY, so a 3-wave pullback on this. Also, with my count here, you'll see right there, it's a 38.2 retracement, wave 4. So, I mean, you know, some people online, I think they try to bully me a bit. I think they're trying to bully me into changing my opinion. But it doesn't make any sense for me to do so, right? My count aligns with the pullback and the ratio and everything else we're looking for. And so I can say right now, if we can get a bullish breakout above this swing high here, right above the daily pivot, I mean, you should immediately be looking up here at the R1 pivot. Right up here around 48,200, 300, right around there. I mean, everything else aside, if we can get a bullish breakout here, or bullish, I say bullish, impulsive breakout here, spike of volume, large candle spread coming up there, nice close above this local swing high. Minimally is where you should be looking at. I've got minimum expected wave. I think I've got to change a little. I think it's 56 and some change. Let me see. Well, it's just about 57,000. So still up here, secondary target at 62.5, guys. And that is just wave 3 of the larger 1, 2, 3. So it's just wave 3 of 3 to head up there. Now, I know this may go against everything else you guys are used to, right? In terms of what Bitcoin usually does in the cycles. It is what it is. Don't think that just because something's happened before, it has to happen again, right? So we'll see what goes on here. But right now, until something different happens in this area here, this is going to continue to be what I'm looking at. Let me see here. There's Fibo. I'll pull him up there while we're talking here. What's going on, Fibo?
What's up?
Let me see
talk
here.
to you. Let's rock and roll.
Yeah, man. Yeah. So like I said, Fibo's going to have his charts up here in just a minute, guys. I just kind of want to go through these because I've been talking about them a lot. I've got Sol here. This is the chart that we've been, publishing here since December 30th or so of 2022. As we continue to go up here, I've got a target up here, a wave 5 of 3 up here at around 170 based on the height here of wave 4. So we just want to see this continue to break out higher here. We did break out of the wedge. And so, yeah, we're looking for that to continue up higher. What I need here is a breakout above this swing high. This is $107.32. If I can do that, that'll add confidence to my count here, looking for that target. And finally, Link, guys. Link. If
Stinky
you guys will
Linky.
remember, talking about, what was that?
Stinky Linky.
Yeah,
That's what a lot of people call it.
if you guys will remember when this was building, I kept talking about how this looked like it may become accumulation here. And as we got this movement down here, I said we'll probably get a spring. $4.50, $5 would be the buy point. We got in that area there, and it's been nothing but rally up since. Just now broke out of this reaccumulation range here, up to 18, almost $19. I had like a $25, $26 target area, just based on this, but looking at the pivots here coming in so impulsively between the pivot and the R1 and just continue at the R2, we should rally to the R5 at least. So probably around $27 at least on that is what I have. So that's what I'm looking at. How are you doing, Fibo?
Yeah, I'm doing well. Doing well. Like I said, I've been busy the last couple of weeks, but I'm back.
You got the craziness out of the way, huh?
Yeah, I'd say it's about 90% over. It's been nuts. But yeah, going into next week, it's going to be a lot cleaner. Put it that way.
Well, that'll be nice.
So,
that'll be nice. That's a
sure,
better way to start the year.
Yeah, exactly.
All
but yeah,
right,
no,
man.
everything's going well. Everything's going
How are
well.
you feeling, man, about Bitcoin and whatnot coming up here? How are you feeling about it?
I like your daily chart. It matches up really well with mine on that level that we need to break.
Okay.
But right now, we're in this kind of I call it liminal space. I know I've said that before. It's more of this area of my 4 hours in the bull zone, and then my daily still in the bear zone. But the weekly had nice support, and I'll show all of that. But it's in this zone of like it's hard to like make a decision of which way it's going to go because we're kind of in this area. But this is where the emotions run the highest.
Yeah.
So that's why I like to stick to a plan better than I am trying to figure out which direction it's going to go. But this is what's happening on what I'm looking at on the 4 hour here. We went into the bull zone back here. What was that? The 26th of January. So right around this point, it went into the bull zone, but we needed 3 settles above this level right here. And once we got those 3 settles, it was a buy. So you'd be buying around 41 or so. There was a quick target at the 61.8% at 43.2. So you would have bought it and sold it there. And then we consolidated a little bit above it, and then we kind of broke back down. Then you would have rebought again at the shallow fib at 42.7. But it went down to the 61.8% level here and held, but it also held the bull zone. So if you're kind of trading the near term, you're still long after taking a little bit of profit. And now we're back above water. We were underwater there for a little bit, but now we're back above. And now that we're waiting to see if this is going to continue to push. Right now, the momentum's not super strong, but it does favor the bears or the bulls slightly. So I'm waiting for it to kind of break this 61.8% level again to really kind of get that follow through to get us to that 100% at 46.1. So that's where my next target would be to sell on the 4 hour. But I'm really just I'm really just focusing on the 4 hour at the moment because when you go to the daily's still in the bear zone. So we went down and we broke into the bear zone, but this is where it gets kind of confusing with the way I approach things. Is we had this previous shallow fib at 36.9 that's been in play for a while. Let me get back to where it was. So we started this bull zone back here, and when this happened, if you took all the fibs here, even though it went into the bear zone here. See if I can show you what I mean. You get down to, oh shoot, I'm really lagging. I'm not gonna mess with that because it's just lagging all over the freaking place. All right. Basically, there's a bull trend that lasted a long time here, and still trying to break down. But what I'm watching is this critical. I'm marking it as critical support because it's that's where that previous shallow fib is, which to me is still a target that could happen on the daily on the downside, as long as we're staying in this bear zone. That risk to the downside to that critical support is still in play, but it could go down to that. It could go down to that 36.9 and hold while being in the bear zone, but then again, still be bullish long term. So you're kind of in this limbo land of, okay, the 4 hours bullish, but is it really super bullish? Not quite yet. But if that daily starts to click into the bull zone, that's where your chart was coming into play and saying you get that follow through. You should crank up to 48, maybe even 50K pretty quickly. And right now, my bull zone is right around 43.6. I think it would have to get to like 40, like a close above 43.6. I think somewhere right around there. I have to look at the numbers here. The high, yeah, I think it was 43.6. I'll have to look that up again, or maybe it was 43.8. But either way, what was your R1, your pivot there, the one
That
you're
R1
looking for?
pivot?
Yeah, what was that number?
Around 48.2, 48.3.
No,
Right around
I meant where you need to break
Oh,
to
the pivot.
the pivot number. Yeah.
Well, the pivot itself sits at around 43,450. I want to see a breakout above the slightly higher swing high just prior to that, right around
Okay.
43,850 or so.
Okay, and so that's roughly where my bull zone is. So if we get up to that point and it clicks into that bull zone, you should already be long the market because it hasn't broke down the 36.9 from buys that were back in, the 16.7, 18,000, 20,000, depends on if you took profit or not. But that critical support there is what I'm really looking at. So that risk on the daily is still there. 4 hours still tradable, but I'm really wanting to see this bull zone on the daily. And then that's when I think we can kick up to 49. And I actually have a target all the way up to 53 if that happens. But right now I'm just still kind of waiting. This latest move to the upside almost got there, and then it came back down and starting to press again. But again, the momentum on the ADX is still kind of trash. Not a lot of like strong buying interest coming into the market. So even though the market's moved up, it's not really building momentum. So to me, I'm leaving that risk to 36.9 still open that I want to buy if it gets down to that level. And then I also have a buy target at 29.4 if we break the 36.9. If we get 3 daily settlements, consecutive settlements under 36.9, then I would get out of those longs, and then I would rebuy it at like 29.4. A lot of ifs if that's going to happen or not, but I wouldn't be surprised if we went down to 36.9, gathered up some more longs, and then start to take off from there. I could totally see that happening. So that's what I'm kind of watching. So it's kind of weird because you have 4 hours good, the daily's kind of icky at the moment, just not a lot of momentum. But then you go to the weekly, and the weekly is still nice and strong, and it came down close to that shallow fib, and held and got a nice little candle on there to find a lot of buying interest coming off that level. So you get this mixed bag. You're like, okay, well the weekly is holding really nice, and the 4 hours looking pretty decent, but the daily still looks like crap. So what's happening here? So for me, I want to leave that risk open until that daily goes bull. And then once that daily goes bull, then the probability of this floor at 38.1 will get a lot stronger for holding as we go forward. So I was on Crown Show just recently, kind of going over this, and it's still the same picture. Even though we've kind of rallied up, a lot of people have asked me, well, are we bullish yet? Are we bullish? Well, to me, I'm not really strong bullish yet until that daily turns into the bull zone, because I want to stick to my model and not get all worked up and thinking, well, it should go that the weekly held, we should be going to the moon, that kind of thing. So I'm still being a little cautious because if we end up breaking down on the weekly, that's where this intersection down here is right around 31, which kind of comes into that 29.4 on the daily. So if we end up breaking down, that 38.1 area on the weekly, and then also on the daily. Um, and we get more bearishness and some momentum built for the bears, then I'd wait for the low 30s. But again, like I said, it's a lot of ifs because we have not broken that yet. Because the 4 hour is still showing some support. I'm just waiting on that daily. And then the other thing that I was looking at for all I actually posted this on Twitter for all the candle lovers out there. I mean, I like candlesticks, but I like candlesticks in longer term periods more than I do short term periods. But the one thing I was looking at was this monthly close, kind of getting this kind of a bearish spinning top to me, and that was another red flag that we could start going lower. So I'm like, okay, so with that type of candle going into the month of February, and February is usually a shitty month for Bitcoin, historically, but that doesn't mean that it's going to go down. But if we're coming off that bearish spinning top going into the next month, and that daily is still not bull, I still got to be careful and it comes down to risk management. I want to reduce my exposure, but I want to have some exposure because if it does break, I don't want to miss out either. So I'm in that kind of area that I want to keep some longs, but I'm keeping my exposure very low, and then I'll add some exposure when that daily goes bull. So that's what I'm kind of looking at on the BTC front here. I like the way the month has started. It's definitely a good sign, but still not a lot of momentum being built on the dailies, which kind of scares me a little bit.
Yeah, let me real quick here. I think you said that you thought that February was usually a down month for Bitcoin.
I don't know. I did it by a visual. I didn't look at data. So
yeah, I was gonna say,
if you have something, that'd be great.
Yeah, I was just looking here. I just looked at that. It looks like generally it's March that ends up being more the down month.
Okay.
February usually is an up month. It looks like since inception, we've had 3 down Februarys and the rest have all been positive, even 0.02% last year.
Okay.
So, yeah. So, I mean, I think
maybe
that
it was March I was looking at.
Better than.
Maybe it was March.
Yeah. I think you might have looked at it real quick and thought you saw March there. I think is where you're looking at. Yeah.
Yeah. And actually, that actually makes a little bit of sense, too, because if you look at it on this timing chart that I have for the monthly, when you go from low to low, so you're going from low to low to low. The low is April of 2024, which is the halving.
Yeah.
So I wouldn't be surprised to get a move up and then a nice correction into March or April, and then kind of get a footing there, and then start taking off after the halving, and then we start pushing toward that 69K and that all-time high, and then further on, later into 2024. So that does make kind of sense, but I don't want to get too bullish yet until my daily goes bull. And once that happens, I'll be a little bit more comfortable adding longs to everything, because I just want to be. I'm conservative that way. I usually don't front run things. I actually wait for the signal. So a lot of times if I front run, then I just get my ass kicked. So I'm like, why would I do that? Just wait for the signal. So if I miss a percent or two, but then the trend actually forms, I'd rather miss a couple percent and gain 15 versus front running and then I'm losing 15.
You guys hear that? Did you guys hear what Fibo just said there? What we talk about all the time, guys. I need you to make sure that you heard that. Stop trying to front run everything. Wait. You're going to have much more success over time if you wait for a confirmation of some sort. You miss a little bit out on the front end, but you're more likely to actually be profitable. I think that's great. Thanks for saying that, man.
Yeah. No, that's something that I had to learn over time. I mean, it's tough because you're like, man, this looks really good. I want to front run this and get that, get in,
Yeah.
But then again, when I'm a swing trader, so to me, the first 1/3 and the second 1/3, or maybe not even a third, but like an eighth and an eighth on each end. I might miss those two ends, trying to find the low or trying to find the high, which I don't want to do. But so I might miss out of not hitting the exact bottom, but I want to make sure that the trend's strong enough for me to actually get in. So that's why I kind of do it that way. I didn't at first because a lot of times you front run because you want to try and make as much profit as you can, and sometimes that kind of kicks you in the reverse. And
a lot of times,
and you learn from it. over time. But that's where I'm at on BTC, is just trying to figure out, has this held? I don't know. I wish the daily would just get some momentum and just get me out of this mess and get us going. But until then, that's what I'm kind of waiting on, is to get us back into that bull zone. We've had a couple of days where I'm thinking, oh, it's going to go, and then it doesn't. So so that's where I've been the last few days, is like just waiting for this thing to break. But so far, nothing. But that's BTC. You want me to just go on different charts?
Yeah, man. Yeah, go ahead and show them what you got, buddy.
Okay. Yeah, I just got a whole bunch on here. Ethereum. These are the main ones that I kind of trade and I kind of look at. Ethereum went into the bear zone. Real low momentum, kind of in this consolidated phase. But we went into this bear zone here. I don't really play the short sides too much unless weeklies are bearish. So like on BTC, if BTC weekly goes bearish, then shorts become in view for me. But until the weekly's bearish, I don't even look at anything long term. So I kind of just play some patience and wait for some downside opportunities to get back into the upper trend. But right now the bear zone hit. So right now I was looking for that 200% extension down at 2204 to be that first level that I could possibly buy while in the bear zone, or I just wait for a new bull zone. So right now Ethereum to me is kind of quiet. So not a lot going on the 4 hour there. Ethereum on the daily. This one actually went into the bear zone also. The previous shallow fib was at 2276. So the longs that I had on here, we had 3 settles underneath. So I got out, took the profit, ran with it. We're done with that. So I don't have any Ethereum positions on at the moment, but we're in the bear zone. Again, not a ton of momentum. It's down there just under 20, I think. So it's not really building a lot. Kind of looks like BTC in a way, where it's not. We had a price movement to the upside, but not a lot of momentum being built. So I'm looking for it. The first, I don't have any orders in, but that first level I'm looking at is just above 2000 at 2003, right around the 61.8% level. That'd be that first level that I would look at to possibly go long while in the bear zone. And then if the momentum gets really strong as the price is coming down here, I might wait even further down at the full retracement from the previous zone there, down there at 1563. But right now it's more consolidative. I'm just kind of waiting, not doing too much with that. So I'll buy a new bull zone if it hits. But right now I'm just kind of moseying along with Ethereum. Flipping over to these are the top 5 that the main ones I trade are BTC, Ethereum, gold, the dollar, and SPY. Those are my main ones. Now I'll dabble on other ones here and there, but those are my main ones that I kind of look at. Gives me a nice little group of like crypto and some stocks and some gold and and the dollar.
You mean you're not aping into shit coins all day every day?
No, I hardly ever do, really, unless it's a really, really good setup, and then I'll jump in. But when it comes to gold, gold's been a weird one. We got into the bull zone right here. If you wanted to, you could take a really quick profit there. I got in long, and I've been long, and I haven't really done much. And I've been waiting for this 2087 target, which I thought I was going to get just a little bit ago. Almost got it. Guys in my group, we were talking. We were actually thinking about just taking the profit because it was a nice move, nice strong move. And futures with the leverage, sometimes if you get close to target and you like the profit, you might as well take it. But I didn't have a huge exposure, so I'm still long and still holding that bull zone. Definitely broke down here over this last 4 hour candle, but it's right there at the 61.8% level still, and we're still in the bull zone. So to me, I'm just kind of holding my long, waiting to see if we can hit that target. So if we end up breaking out or breaking to the downside, my loss will be minimal. It won't be much. So it comes down to the risk reward, right? Just hold on. If you do a little bit of a loss, but you got chances for upside. But on the 4 hour, it's just been kind of in this, range bound trading, but it's definitely nice swings back and forth. But I've been busy and I haven't been trying to trade it. I just been kind of holding it, see how that works out. So bull zone, hitting support, finding some buying interest off both candles off that 2046 level, see if it kind of holds. But then when you go to the daily is staying in the bull zone. It hasn't broke down into the bear. Now it's tested it a couple times on this 61.8% level here, but it hasn't broke. So been long that, been waiting for my target. Actually, it was there's been two trades. I got in long, and then it hit the target here at 21.44. So I took that profit, and then it dropped back down to the shallow fib at 20.69. So I'm actually been long there for a while. Been underwater. Just got back above water yesterday. Now we're back down again, but it's still holding the bull zone, and I made good profit off of the original bull zone. So I'm willing to kind of hold that long to see if we can kind of continue up to that next target for me, which is right around 2203 is where that target for my current long is. But bull zone's there. Momentum is still decent for the bulls. So for me, holding on to what I have here long, I think just kind of continue to hold it until it tells me otherwise. Now I'm a little nervous that we're getting these lower highs, but just stick to plan and kind of go with it because I really don't know what's going to happen. So I just got to stick to plan, right? So, but I made really good profit off this move when it's futures, it's that leverage is nice. So if I end up losing a little bit here, I'll still be positive going forward. And that's the way I kind of look at these zones is if I get really good, if I really get good movements in the beginning and I get good profit, I kind of look at those zones as like its own little world. So if I'm up 10%, but I lose like 4 on a loss to the downside, and I get a net positive for the entire zone, then I'm happy with what I'm looking at. And that's what I'm kind of doing here with gold is took profit, a little bit underwater at the moment, but we'll see how it goes. Let's see, dollar's been just crazy. Actually, we just went back into the bull zone here as we're going on to this 12 o'clock hour or 11 o'clock hour for you. But here's the thing. We were in this bull zone back here, got up to this point, went into the bear zone. But as you see here, we never had 3 settles under this previous shallow fib. So any longs that you had should continue to go, into that next one. So even though we went into the bull zone here, all you're going to do is press your long. So if you are long, you're just going to add another long on the new bull zone. And then that first target from the previous longs is right there at 103.90. And then the next target above that is 104.12. So in other words, I got some tight targets to where it's not really overall like the dollar screaming bullish, but it's bullish enough to trade the 4 hour in this range that we're in. So I'll have to update this because now that we have these new highs here, this actually gets moved over, and then this previous shallow fib becomes 102.81. So that's where my line in the sand is now. Now that we've moved up there, but now I'm also going to have to put in a new bull zone on this latest candle here. But I'll fix all that up later. But but we're in the bull zone after being in a bear zone that really didn't trigger bear. So everything looking decent there. And then you go to the daily, and we've been in the bull zone on this one. We bought in here after 3 settles off the previous here. So I've been long here, waiting for the target at 104.25. We can actually move this up a little bit. And the shallow fib now is at 103.53. So if it actually dipped back down now that it made a new high, I would actually make another long if it dips back down to go higher. But right now, target's at 104.25, which is a 61.8% level. And unless the momentum gets really strong, that's where it should kind of top out and start to work its way back down. Maybe stay in the consolidation, or we head down lower, back down to previous lows. But right now the momentum is not great. The ADX is only at 20. It's been on a down, kind of on this down move. So even though we've had these moves to the upside, you're not really seeing a big change. But this is a daily, so maybe after it closes today, you might get that little switch from a day over day to a positive. But really, it's not the strongest thing in the world, but enough to where I want to continue my longs to at least the target and take the profit. So that's where I'm at on that. What's your dollar look like?
Yeah. So
are you in this? I was kind of
yeah,
curious of that.
for the DXY, I've got further upside. We're looking maybe about 104.5 or so. That's the
Okay.
the R1 pivot there on the daily. So that's kind of really my next point. After that, you get this long candle. You've got this fair value gap on the daily all the way up to 105.58. So I think if we're gonna stop, I think that 104.5 maybe might be the
Okay.
top area where we'd look
All
for
right.
that reversal.
All right. Perfect. Then my 104.25 will fill, and
Yeah,
then we'll
right
be
up
good.
there. Yep. Yeah.
And then we'll go from there.
I
But
like
yeah,
that.
that's what the what?
I said I like
What'd
that.
you
It
say?
works.
Yeah, exactly. Hopefully that's what happens. We got to go up there, fill the target, and then head on back down.
Yeah.
All right, moving on to SPY, which has been kind of nuts.
Look at that.
We had bull zone, went into the bull zone here, so buying it, went back down, probably scared the shit out of you because it's leverage. Worked it, and then it's working its way back up. I can actually move my fibs up now. I always like moving fibs in a bull zone up to the upside. So the shallow fib now is at 49.54 and a half, with a target of the 200%, which is from the high and low from the previous zone since it went into the bear zone here.
Yeah.
So any new longs in here, 49.93 and a half is my target off the. I mean, if you would have went into the bull zone, you would have bought probably right on, probably about 49.57 or so, and then your target of 49.93, and that's on the 4 hour, being in the bull zone there. And then when you go on to the daily's been in the bull zone for a while, and it's been kind of nice. This is where I made most of my money. Was off of this trend line break that matched my 200% from the previous. This move was nice, and then it finally hit. But then I haven't done anything. There's two things you can do here, but I've kind of stayed out of it because we've had such a large move to the upside. I didn't want to add more, because there's two things that I can do with my method. Is now that this target hit and I took the profit, I would wait for a shallow fib, which is all the way down to 47.63, which is pretty far down there. So even though we had this move to the downside, you're not getting back any longs because it didn't retrace far enough. So the next thing you would want is if you get 3 consecutive daily settlements above 49.13, which we have, you could have bought doing that to continue the trend. I decided not to for a couple of reasons. Been really busy, so I don't really want to manage it. But so I'm just kind of waiting for, basically I'll probably end up just trading the 4 hour more than the daily. But right now, if you are long and you took the target and then you actually bought again, then you're sitting pretty good because you made a ton of money off the initial bull zone. And then if you added on this latest one, probably scared you a little bit on that red candle to the downside. But now we're back up, making new highs. So for me, given where we're at and how I approach things, there's no other way for me to really measure where the next target is except for using some trend-based extensions. So now I have this huge ass gap all the way up to 52.35. So I don't know where to put a target there based on what I do. Now there's other ways to find levels, but the way I approach things, it's kind of hard to find a level there. The only other thing I could probably do is maybe do something along the lines of like sometimes I'll take it like from trend line breaks, and then take up like a trend based extension, and bring it like that, and maybe 5030, maybe 5032 might be a spot, stuff like that. But otherwise, the way I look at it is the next target for me is not all the way up until past 5200. So but I'm not long. So, but other people that are long that that are looking at this, maybe 50.32 would be the next level, maybe even go a little further than that. But because I don't have anything in history to base it off of,
Right.
because that 200% at 49.13, what I would normally do is I would go back in history, find a significant point around that area, and then find new extensions. But there is none, so you kind of have to use the trend-based extensions, or you can do the whole entire move if you want. But then again, you're way off the charts again. So,
Yeah.
so I don't know how to approach that, but those are different ways that I would probably do it. Or you just kind of play it and see if 52.36 kind of hits over the next month. Who knows, or tomorrow. Who knows how this market's going to go? It's nuts,
man. It's been rallying so strong and so hard for so long. I mean,
Yeah.
I was bullish. I was bullish. Off the swing low. A couple years back here, it's getting. I guess
it's been nuts.
But it's even making me. At the beginning there, I said, "Man, listen, it could be doing this, or this. We have to see how it plays out." It just continues to be, ultra bullish. So yeah, it could hit the 52.36 in a day or something. The way it goes sometimes.
Yep. And it wouldn't surprise me. I mean, who knows? But that's where I'm at on SPY. And then I had some. Then you brought up some of the stocks, so I kind of updated them really quick this morning. Like on Apple here. Interesting. I didn't trade Apple, but I just did this morning just to see where. I had the zone, so I knew where those were. So we went into the bull zone here. Kind of worked our way up and then came back down and hit the bear zone. But once we hit the bear zone here, this would have been a sell because we were already well under the 38.2% level when this hit. But the area to watch is the 200%. So if you wanted to buy during the bear zone, the 200% is that first level to watch. It kind of went through it and then bounced off of it pretty nicely. Just with all the jobs reports today and everything else that was going on, kind of swung the market. The earnings, I meant.
It dropped on earnings. It double beat on the earnings, but everybody's worried about China sales.
Yeah, so But then it found some momentum behind it and got it back going again. So bear zone. So if you were actually playing this, you'd be long right around 181 or 181.30, somewhere right around there. And then the way I would approach these is, if it gets to the 200% and I bought, I usually would kind of hold it and buy more if it gets into a new bull zone, or if it gets up to an extension. So I would probably sell it at between 191, 192. If it rallies up there, that's when I would sell it. Probably still be in the bear zone at that price level. It'd probably take a little bit more to break through that point, because those fib extensions between the 127 and 141 are those areas for me on these zones that could possibly be the reversal points. So if it gets up to that level while we're in the bear zone and I'm long, I want to take profit, because it could easily drop right back down to where it was, and I wouldn't want to lose all that profit. But I'm not in it, but that's how I would approach it. And then I was just playing around with Apple, and I was looking at some trend lines and some breaks. This key support here at the 61.8% level looks really awesome, just off of this latest leg. Kind of tapped in there again. I was just looking at some trend lines, but it was just messing around. But on Meta, Meta just went nuts because they gapped up. Let me move my fibs up a little higher here.
Yeah, for those that don't know, real quick, Meta double beat on earnings after hours yesterday, and I believe they're offering like a 50-cent dividend, first time they're ever offering dividends. So really just skyrocketed from right around $400 to almost $500 overnight into today.
Yep. And bull zone, we had these two highs right here, and then it broke into the bull zone. So you would have been buying if you did the bear zone here. 38.2% level would be a lot lower, just because it's been in this area consolidation. But then we broke up, came back down and held right there off these previous zones. So that was interesting that it held right there, and then it's been up since. So if you bought here, your first target is 475.84, which I didn't think it was going to happen that quickly, but my goodness. Because the only thing is I had this previous zone, just like stock market, you got to find the previous zones and all that kind of stuff. So two things. Let me see if I get it back over here. Once I don't have all the fibs in here, but once this broke up and hit there was a target that would hit right around this area. So if you go back in history, you're at this high right here. So then I go down and take the high at that point down to the low to look for the extension of where that profit area would be or where I'd want to take profit. But then again, this is a range, and I didn't have anything to go back into history to find where to place it.
Yeah.
So then I had to use the trend-based extension off of my zones here and just worked it up to this point. And then we had this period of consolidation. And then once we broke that, the 100% is at 475.84, which falls within that range of the fib extension back here. And that's where the profit would be. And that actually hit today off of the gap and then moved up.
Beautiful.
So if you're in this and then you've been long since this point, take profit. And then if it drops back down, the shallow fib's at 422, and there's a gap there, so you could actually, play it the way you want. I would buy the shallow fib. It might wick all the way down to fill the gap if it starts to retrace, because there could be a lot of profit taking here with such a large move.
Yeah, huge move.
That you could actually fill that gap pretty quickly. But if it gets down to the 422, the shallow fib would be bought there. And then the next target above that could be two things. I typically wait for the 200%, which matches nicely with the 200% off the extension also. So 675 would be that next level. But if you want some earlier ones, you can use the 530 to 558 zone as another level. So if it drops down to 422, and you buy, then 530 to 558, somewhere in there would be your sell. And then, of course, if that happened, then you'd move the fibs up. The next shallow fib would be at 458, and then 675 would be your target. So that's kind of the stair stepping that I'm looking at on here. Was I in it? Did I trade it? No, I wish I would have, but I wasn't in it. But that's how I would approach that. But the zones are looking pretty nice.
Yeah.
Since I haven't looked at this in a while, the zones look pretty good. And then the other stock was Amazon.
Amazon also double beat on earnings after hours last night, guys.
Yep, gapped up pretty good. On this one, there was a bear zone here that went down, came back up, got into the bull zone. What would that have been? Basically right at this 200%, which is crazy. Kind of a weird time to get in, but you would have been buying at about 159. But then the target, again, you go back in history, once the 200% was hit as a target, which is awfully weird because it was in a bear zone. It's a weird setup. Then you go back into, previous levels that match up. And then I go down to here, and then I find an extension. There's two things in here. You got one that's a previous level right here. It just depends. And that's right about 188. But then you also have a 300% off of this other one, which is at 181. So you can either have either one of these targets that are within this range. It just depends on how you want to attack it. So right now, if you bought during this new bull zone, your first target is going to be probably that 181. If you want to be a little bit more conservative, if you want to be a little bit more aggressive, then you go to the 188. And then also, if it drops back down and you buy again at 164, just like on Meta, you got that gap. It could start to come back down off profit taking. You buy there, you could actually have this first buy at 181, comes back down, have your second buy at 188. It just depends on how you want to attack it. But yeah, nice moves. Crazy stuff. When something gaps like that, that's pretty crazy on a stock like that. And then the other ones I have on here, just a few shit coins. Solana was in the bull zone. I think we hit if you were in the bull zone, I think it hit a target. I erased everything to kind of keep it clean. But then we went into the bear zone here. And then once we went into the bear zone, we were already well under the previous shallow fib here. The 100% level could be your first buy, typically not mine. So once you go into a bear zone, you could have bought it there. I wouldn't have. I would have waited for at least the fib extension. So going into the bear zone and buying it while in the bear zone, I wouldn't have bought it there. But we have rallied up, but we've rallied up on down momentum, and bear zone still intact. So for me, we're not in that new bull zone yet, and that's what I would have to wait for to buy on the 4 hour here to get back long on Solana. So to me, it's not super bullish yet. It might look it. But this latest move back up to the upside is not making new highs and it's not building momentum. So I'm a little nervous on that one. So I'm out of it. I don't have any at the moment. If it gets up into a new bull zone and the momentum starts to come with it, yeah, I'll buy and get in that bull zone. And that might be a good setup for that. But then when you look at the daily is a mess. There's so much going on this, because on the daily, you were in this bull zone, worked its way up, went into the bear zone, never had 3 settles underneath this previous shallow fib at 85.67. So you're long. Most likely, I'm sure you were taking profit because long. If you were long here, you had a profit at this 100% at 68.44. There was another level here at 84 to 93, and then eventually this target that hit right at the top, right at this 200%, which was beautiful. You could have taken profit there. As it came back down into this area, and it went into the bear zone, you probably would have bought the shallow fib. And then if it would have went underneath the shallow fib 3 settles, then you would have got out. So if you were playing this, you should be long the daily right around that 85 and change, with the next target all the way up up in this zone between 159 and 176, which is
love it,
way up there. So
170, I believe, is my target. So yeah,
there you go, boom. But so I'm not in it, but that's where you would, according to my plan, would have been long, and then going that way. But then again, momentum's not that great right now. But there's shit coins that could change on a dime, and then work our way up. So what I was actually looking for was a buy here at the 38.2% level. If it would have broke 3 settles underneath that, I'd be waiting for all the way down here before I got long again. Because I felt like if that broke, that was going to be a major correction time off this latest move to the upside right here. The 61.8% level might have held, but we'd have to. That's the kind of thing that I would play by ear or by sight. Once it got down to that area, I would want to see, look at the internals. What's the volume? What's the what's the momentum looking like? That kind of thing. Is it going to hold? And then maybe I take that risk. But I don't like buying in bear zones too often. If it's starting to break, especially a shallow fib and going into a bear zone and there's momentum behind it. But right now it's holding and looking good. So nice little working our way up to the upside. And then Link, same kind of thing. You got into this bull zone, worked its way up, went into the bear zone, but again, the shallow fib was at 1325. Wicked down below it a couple times, but didn't have 3 consecutive daily settlements under it. So that to me is still that line in the sand to maintain long positions. So you got this nice little move up, little area consolidation. Now we're starting to pop up again. I know there's a lot on here, but there's been a lot of targets going all over the place because this is actually one of them I've traded. The target hit here at the 100%, which was right there at 1736, and then it hit the target there, and then worked its way back down, and then the shallow fib here. Then it went bear, but then it didn't break. So you should have been buying again while it was in the bear zone, and then we just went back into the bull zone. So you'd be buying again. So the one you would have bought back here at 13 and change would have the first target would be between 1907 and 1980. which hasn't hit yet. But then again, if you would have bought on the new bull zone, then the next target above that is at 2155. I know it's a mess because there's so much going on with different levels and things going on. So once this hits these targets, I can erase all this shit in the back and then just kind of focus on the new bull zone. But unfortunately, I got to keep it all there because we never broke the shallow fib from before. And just like the other one, I have to clean this up. But this one here needs to move up to where the new high is to give us a new line in the sand on the shallow fib as we go forward. So if this actually starts to come back down and go back into the bear zone, that's the level. That's the new level to watch for that new bear zone if it happens. So that's where we're at on that.
Is that 1393?
Yeah, 1393 is where it's at now. So right now, if you're long, next targets are, well, I don't have it set, but somewhere between 1907 and 1980. If you want to be conservative, just take the bottom of the target, 1907. Take that, and then if you're also long from the new bull zone, 2155. But if it starts to drop back, 1393 would be your buy, which is that previous shallow fib. So, but I like it. I mean, this one actually, the ADX is starting to kick back up. It's coming from low areas, but it's starting to get a nice day over day positive, which I like to see. But it's still relatively low, so that's why I'm not crazy about it just yet. But new bull zone momentum starting to look like it's building, or with an early bull. So I like it. Just like Solana, I think it could continue that trend to the upside since those previous shallow fibs were tested and not broken, and is held and continued to the upside. So I like them. I like that. And the last one that I own is Stacks. I've just been kind of playing that one too. It's that layer 2 on Bitcoin. Went into the bull zone. Just been in this area of consolidation with low momentum. Nothing major going on. Just long, waiting for a target of 170, and we're at 152 at the moment. So nothing crazy there. But that's the charts I had open. Unless
awesome,
you got anything to add, or anybody else wants to see any other charts I might have. Excuse me.
Now, somebody asked if you got something on Tesla.
Yeah.
I think is what I saw there, or FTM.
Tesla. Let me see. Tesla, I've been waiting for a downside. I haven't been back long yet. Been in the bear zone on Tesla here. It tested right when it was trying to break out right here. But high, lower high, lower high, lower high, didn't break the zone, got really close, but didn't break it. And then we just kind of been working our way to the downside. So for me in the bear zone, I've been waiting for 167 as my area to get back long on Tesla. So my target's just been I just been on a wait and hold, being patient. Didn't play the short side, anything like that.
Yeah.
I've just been kind of waiting for at least that area. It could actually go a little bit further, but a lot of people were saying like, well, it went below the bear zone, went back up, below the bear zone and then back up into the bear zone. But the momentum is still super strong for the bears. So until this starts to get a little bit more emphasis for the bulls, I still think a further target to the downside, even though it went into oversold conditions, popped back up. I still think you can get back into those oversold conditions again as we get into 167. But that's what I'm looking at on that. Just been kind of waiting to see. Now I've traded it in the past here and there just for fun, but I haven't been in it in a while. After this bull zone and went into the bear zone, I haven't done anything in here. Just waiting for a target, and 167's been kind of it, and I've been waiting. Just kind of patient. It's not that I need it. It's not that I need another position. I've just been kind of waiting on that.
Sure,
what do you got? Do you have a Tesla? Do you have a Tesla chart?
Not at the moment, no.
Oh, okay.
But I think that's pretty close to where
one?
I was looking with that gap down and that really negative sentiment coming in. I think the volume was pretty high on that. So I'm looking for a bottom potentially around this area, or maybe even down there toward 167.
Yeah, because
Probably
another thing is just this leg right here. If you take this fib, let me take the extension off here so you can see what I'm looking at. So just breaking this 100%, coming down, coming back up, and testing right here, and then coming back down.
Yeah.
Like I said before, I really like that 127 to 141 zones of where you could have a reversal, and the 100% from my previous bull zone is at that 167 or so, which falls within that fib extension of making a new low off of that. So that's that zone I like to see a possible reversal. So to me, I like that 167 as that first level. Now if it ends up breaking down, then the 200% comes into play. But then when you look back here, this is just the amazing awesomeness of Fibonacci. Is now you're on this. If that happens and you break that, if you break this 100%, then this zone comes into play. So if this ends up breaking down, then I'm waiting for 123, because that's where that 200% falls within that previous zone. So to me, if we break this 100%, it's the fib extensions that could be the possible reversals. But also, this is just a full retracement off of the zone. So it could be just an up and a down, and then finding that support again. Then we just head back higher again. But we'll see. But right now, my first target's at 167. I think I have an order in at 167.20, just sitting there as a limit. But I mean, it's probably been sitting in there for a month. But
it's growing cobwebs.
Yeah, exactly. So I'm just been waiting, see if it happens. And then if I buy there and we get 3 settles underneath the 100%, 3 daily settlements under 167, I'll just get back out, and then I'll wait for the 200%. That's the way I'll approach that. Any other thing? Awesome. Any other charts or anything? Or anything else? Any questions?
Well,
comments,
FTM if you have it. If you don't,
FTM,
it is what it is.
I might not. And if I do, it's not going to be updated. Let me check. I haven't looked at FTM in a while.
Yeah, I hear you.
Let me see. I got a 4-hour. I might have zones, but I might not have it updated. No, I don't have it updated. Looks like bear zone at the moment. Yeah, I'd have to update that to know where all the levels are. I don't have it because it's been back and forth, so I don't know if it held certain zones back in here. It'll take me a while to work it up.
All right. Well, that's
but
cool,
right now it's in the currently it's in the bear zone. So if you want to look just at that, don't do it 100%. But if you look at so if you had this zone right here that popped in, I'm just going to rough it in real quick and then you had this one here. At this point, we can just look at just the current, but again, we might have held other previous shallow fibs, but I don't know. So in this case, let me blow it up so we can see the actual numbers here. So right now, this bull zone. So we went into bull zone, got some bull momentum. Let's see, we got here. I can do it real quick just to see where we're at. Just to see if this zone here actually be this one right here. So you're looking at the target. Yep, nice. Bull zone, hit the target, worked its way down. Now we're in bear zone. So that worked out pretty good. If you're, I wasn't doing it, but as you can tell, if I was doing it, sold nicely, went into the bear zone here, well under the previous shallow fib, which was right here. So we're already well under it. So, but then the fib extension is the 127 to 141. It looks like it's hard to tell because I got all the, let me move those numbers over to the left so we can see what now I'm looking at. The low was 34. It might have just touched there, but it would have been down a little bit further, so it would have missed there. But right now, the being in the bear zone, that would be your first spot to consider buying in there. But for me, it would be down here. I'd want to see all the way down to 0.3127. And then you can look at a couple other things that, like you're taking like this trend line here. I'm just roughing this in. Just looking at let me get I like to take just to see if it matches up. I'd be looking just underneath this zone right here with the trend line basics, the trend line break measurement. So you're looking right around that spot as a possible buy while in the bear zone. But keep in mind, if this price comes down to that level and this ADX starts kicking up for the bears, I'd rather be looking down here, much further down for a buy while in the bear zone. So I know it's a mess, but that's where I'm at on FTM.
No, I appreciate it, man.
But
I know you said
don't give it 100% because I'd have to go back to the other zones to see if there's other levels that make sense. But that's where I'm at, just looking at current. Yeah.
Okay. Yeah, well, I know you said you needed to get out of here a little bit early, and we're a little bit over that, so I'm not going to.
I'm good for probably another 5 minutes.
Oh, you are? Okay. Well, let me pull up a couple of charts in real quick here.
Yeah, I'm good.
That we're asking about. Let me see here. My Q's chart, I've got wave 3 in progress. Minimum expected 438.25 based off the height of wave 4 here. So looking for that to potentially continue pushing higher, get a breakout above wave 3 here. We're just about at that I think it's an all-time high, right? Yeah, up at that all-time high. This is the 1 hour. Is it the all-time high? Let me see.
Or 305.
Do what? Locally here?
To the upside. Is it a 5 of 3 or 3 of 5? I couldn't see it.
Yeah, this will be 5. It'll be 5 of 3 of 5.
I got you. I can see it now.
Yeah. But just looking right here, just looking locally right here, we got 1, 2. Looks like we got 3, 4. Looks like we're in that 5th wave up to around 438 or so. 4 hour, you can see we got a lot of room to go here on Stochc RSI and RSI. Bottomed out, crossed bullishly, broke out on Stochc RSI. RSI found support at neutral, threatening to break out bullishly here, getting some volume on that 4 hour candle if we kind of gapped up a bit here. So pretty clearly a third wave right here as we're continuing this rally up. So I like that. Somebody's asking about BCH. Nothing's changed here. My count still got a 1, 2, 3, 4. Pretty clear wave 3 here. Large candles, large spikes of volume. Pulled back about 50%, secondary wave 4 target. And so, we should be rallying up here. Wave 5 based on the height of wave 4. Well, actually, based on this being based on the height of wave 4, it gives us an initial wave 5 target. Yeah, right there around 497, 500. If this is a 1, 2, which it appears to be, we're probably looking closer to about 557, 558 on that right there. So, but it's just the way it is, guys. Bitcoin's rallying. Pretty much everything else is going to rally with it in crypto. Not everything. There's always something that sits out on its own. But generally speaking, if Bitcoin's in a bull market, altcoins are generally in a bull market. Minus, like I said, minus the few that just happen to do the other thing. But so I mean, there shouldn't be a surprise with Bitcoin rallying higher, BCH, BSV, whether you like them or not, heading higher. Binance Coin, all the ones that everybody kind of flooded and talked a lot of emotional responses about. Probably still getting. I don't trade BCH. I won't touch BSV, either one of those, because of the people behind them. But that's just me. That's just personal preference. But it doesn't mean they can't go up with Bitcoin going up.
There's plenty to trade, plenty of opportunities all over the world.
They're definitely.
You don't have to. You don't have to trade everything.
Yeah, exactly, guys. I mean, and it sounds we kind of laugh a little bit here about it, but you got to understand. I've been doing this for almost 30 years. Fibo's been doing it for just over 20 years. I mean, between the both of us, guys, 50 years of trading here, and we're laughing because we remember what it was like when we first started out. And it's the same way most of y'all are when you first started out, and maybe you're just starting out now and you're that way. And
I was probably worse.
And, and it just, when you get into this thing for a while, you learn, okay, no, there's better quality trades versus just quantity of trades. So, we're trading for profits, not for trading, not to get the number of trades in. And that, that's kind of the way we work it there, guys. Okay. So, I'm going to get out of here. Fibo's going to get out of here. Hopefully you guys, enjoyed this. I know we had to wait a little bit extra longer for Fibo here, but, as usual, we'll look for him again in 2 weeks, as long as his schedule permits. He'll be back with us, and he'll wow you with some more magic. And we can make money,
hopefully
right?
it was helpful. Hopefully it was informative.
All right, guys. Yeah, so you can join. Fibo's got his Threshold Theory group that he runs with us there at Texas West Capital. You can go to members.texaswestcapital.com to join that. As always, of course, TWC has its group coaching program, which is the absolute most in-depth, the most comprehensive trading program you're going to find anywhere. We often have, professional traders, those who actually have been professional traders in the past or are currently, come through to get their, to update their skills and whatnot, because we know what we're doing. As long as you're willing to put in the time and the effort, guys, we're going to get you a lot further than you've ever been in a lot shorter bit of time. But you got a whole year working with it. It doesn't take you a year to go through this stuff. Take maybe a few weeks, depending on how much time you have to put into it, because there's a lot of coursework in there. But after that, it's about coming back and showing up every day, guys. It's about constant. You can't think you're going to go through a course of any kind in any part of your life and think that, I went through the course, so I know what I'm doing right now. You got to practice. Everything you do, you got to practice. You got to show up, and then you have to show up once you've shown up. All right? There's nobody out there that can do it for you. I can't do it for you. Fibo can't do it for you. We can show you how it's done, but you have to put in the work. If you're willing to do it, though, Fibo and myself, man, we will bend over backwards to help you guys. All right? So, by the way, right now, as you've been seeing, we do have a 50% off on our group coaching. So make sure you take care of that. That's almost about to expire on there. So jump in it while you can. Other than that, remember, guys, the only thing you control is how much you lose. That's it. So please keep working on your risk management day in and day out. It is the absolute most important thing you're going to do as a trader. Only other real advice I can give you that's just general across the board is don't enter just because there's a chance. There's going to be a lot of setups that look like, it's just a chance. Look for the higher confidence entry. Look for the entries where you have a confluence of factors coming together that suggest you're more likely to be correct than not. If you can do that, you're going to get rid of a lot of the losses you have. And when you win, when you do actually trade, you're more likely to win. And, that's the goal. You want more winners than losers, and you want a higher average win than your average loss. All right? Fibo, as always, man, love having you here.
Yep,
hopefully
thanks,
we'll see the rest of you guys over there at Texas West Capital with us in Fibo's group or with the group coaching there. And we do have a free site. We're trying to figure out how best to implement that. So join in now. That will get you discounts and stuff like that as well. Even on the 50% offer, you can get a little bit larger discount by joining the free side there. There is a link in there. And lots of stuff coming up, though. So you guys have a great weekend. Y'all trade safe. We appreciate you joining in. And man, oh man, I guess we'll see you next time there, Fibo.
All right. Thanks, man.
All right. Take care, everybody.
Later on.
Trade safe.